It's January 12th, 2026, and you're listening to the Stock Market Daily News Podcast, your go-to roundup for essential market moves and real-world financial insight. Yesterday, Wall Street showed mixed action. The S&P 500 closed little changed, while the Dow Jones edged down just under 0.1%. The Nasdaq, meanwhile, gained about 0.2% as tech headlines dominated the session. On today's episode, we'll look at record-breaking index highs, wild swings in penny stocks, investor outflows across India, and big money shifts across global sectors. Let's break down what's really moving the markets. First up, the FTSE 100 has broken new ground. The UK's major blue-chip index soared past the 10,000-point mark for the first time since its launch in 1984, finishing last year up more than 20%. This signals strong investor confidence, fueled by steady corporate earnings and the appeal of long-term investing over cash savings, especially as interest rates creep lower. Still, experts warn, treat stocks as a long-term play, keep a cash buffer for emergencies, and remember that sudden corrections, especially in AI stocks, are a real risk in this momentum-charged environment. Switching gears, India's stock market is facing turbulence as foreign institutional investors, or FIs, sold off nearly 12,000 crore rupees in equities within the first 9 days of the year. Despite strong buying by domestic investors and India's GDP growth projected above 7%, the Nifty 50 fell 2.4% and the Sensex dropped over 2.5% this week. Driving this volatility, stalled U.S.-India trade talks and renewed geopolitical tensions. Analysts are advising caution, focusing on quality large-cap stocks and emphasizing capital preservation as FI sentiment remains skittish. Now let's zoom in on penny stocks, a word of caution for the risk-takers among us. 13 actively traded penny stocks on the Indian market have crashed between 25 and 50% in just 1 month. Names like Chandrama Mercantiles and Titan Intech led the declines, underlining the danger of chasing low-priced, thinly traded shares. With high volatility and liquidity risks, investors are being reminded that while the chance for quick gain exists, undisciplined approaches can quickly lead to outsized losses. On a brighter note, some Indian Nifty 500 stocks have caught analysts' attention for potential upside. Shares like Inox Wind, Cohance Life Sciences, and Adifir Birla Real Estate have consensus price targets suggesting 50 to nearly 80% growth over the coming year. While these are just estimates, not guarantees, it shows where analysts are seeing strong earnings momentum and possible breakout opportunities, especially in renewables, life sciences, and real estate. And globally, Nigeria's equities market keeps powering ahead. The NGX All-Share Index posted a 51% return last year, outpacing much of Africa. The stars? Consumer goods, banking, and insurance sectors, all fueled by improving macroeconomic conditions and foreign capital searching for value as yields decline in developed markets. With inflation dropping sharply from nearly 35% to just over 14% in a year, investor appetite for Nigerian stocks and alternative assets like infrastructure is expected to strengthen through 2026. To wrap up, yesterday the S&P 500 held steady, the Dow Jones ticked down, and the Nasdaq posted modest gains. Across the globe, market leadership is shifting, AI-driven surges, cash moving out of savings and into stocks, and foreign investors reacting to geopolitical signals. Keep your eyes open for upcoming earnings reports and rate cut signals from central banks. These could drive the next big move. Don't miss out, subscribe or follow us for your daily dose of smart market news and analysis. Thanks for tuning in to Stock Market Daily News.